Hello guys, welcome back again to my YouTube channel. In this video, what I'll be showing you is how to have a stable cash flow for your business. It is vital that you have a stable cash flow to make sure that you can afford to keep running your company. Even if your brand is very popular, you could lose your main suppliers if you delay paying them for their goods because of cash flow problems. Likewise, even the best talented could leave your company. Who knows if they are not paid on time. A stable cash flow helps you attain quick growth and not just pays for itself. So that's what we'll be glancing through today, on how to have a stable cash flow for your business. The best thing about having a good cash flow balance is that you are able to provide the products and services to all your customers without worrying too much about the debt. So where the big question lies now is, what is cash flow? So let me just go straight to the point, not to just waste your time. So cash flow is the movement of funds in a company or in an organization. You understand? It is the difference between the income you earn and the expenses you make. So in a normal business, the difference between your income and expenses is called profit. That's what you have left. So on the other hand, if you are just starting a new business, then you need to know about business finance as well. So cash flows are the amount of money coming into your business from various sources. The most important among these sources are sales. That's the sales you make, rentals, purchases, and payroll. So money received represents inflows. That's the money coming in, while money spent represents outflow. We have cash inflow and cash outflow. So these outflows or inflows determine the profits or the loss of your business. Now, if you want to know how to have a stable cash flow in your business, you have to be able to manage your resources magnificently. You have to be able to manage your resources. Flow is the life and blood of any business. Just as you know that as a human, you need blood, and water, especially to survive. So the business as well needs a blood. The cash flow is the life and the blood of any business, because it will enable you to pay all your bills and make investments that will give your business the money it needs to grow. So now, what the next thing here is some attributes about cash flow that you need to understand. So now we have the cash flow analysis, which is the first step here. This cash flow analysis, let me just glance through the meanings to you guys. This determines how much money a firm or an organization generates and spends during a certain period of time. For any firms, it's a key indicator of their firm's performance, since it can easily be analyzed and compared. Cash is usually tangible, as we all know, measurable, and can be quantified in common units acceptable by anyone. Now, it is used as a basis for calculating expenses, working capital, and also as an estimate of the firm's future profits. And additionally, it helps managers to know what kind of loan they need to get from financial institutions, just like banks, so in order to improve the flow of their business. So businesses must monitor and as well analyze their cash flows in time to determine their liquidity. You understand? This analysis is used to facilitate decision making about short-term and long-term financing, investments, and other related issues. When you use a cash flow analysis to monitor your operations, you will see where there are problems, such as too many outflows and very few inflows. Then the analysis will also show you your net income is consistent and varies a lot from the net income figure. So if your outflows exceed your inflows, I don't know whether if you guys are getting my point. If your outflows exceed your inflows, then your income will be seriously affected. So on the other hand, if your outflows are less than your inflow, then your net income will likewise be stable. These are signs that your company may have cash inflows or outflows that you should be concerned about. So there are basically three categories that businesses should track and analyze regularly to identify the company's liquidity and solvency. There are cash flow in operating activities, which is this, you understand? Then and cash flow in investing activities, cash flow in financing activities, and cash flow statements. You understand? So I will just glance through this ones listed here above. So let's just start with these cash flow operating activities. By tracking cash flow operating activities, a business owner can fairly assess its working capital requirements. This form of cash flow analysis is also useful in determining the amount of cash needed for various planned business operations, such as purchasing equipment, building, construction, leasing, and expansion of business. So now the next one here will be cash flow in investing activities. You know, cash flow in investing activities relates to cash flow in investments as well. That is the profit or loss, the return of principal amount invested. That's the initial capital you invested in the first place. So this is from various categories of investment, including interest in fixed resources like oil, gas, agricultural products, and those precious stones, precious metals. So cash flow is in investing can be defined as the difference between the gross profit at the end of one period and the start of another period. So then the next one here is cash flow in financing activities. This cash flow in financing activities here is primarily related to your gross value. The difference between the cost of capital and the value of your equity instruments. So your gross value here is the value you obtained after deducting your inventory, your cost of capital, and your net tangible assets. So if your gross value is less than zero, then you will have a serious negative cash flow in financing activities. So the next one here is a cash flow statement. So in modern we all know, in modern accounting terms, you understand, a cash flow activities, which is also being referred to as a statement of cash flows in an economic statement, so it breaks down the analysis into different operating, investing, and their funding activities. You understand? The statement of cash flows depicts the movement in liquid assets and liabilities, which is including short-term operations, long-term liabilities, then long-term assets and long-term financing obligation, accounts receivables, all this. So it is essential for all financial statements because they are intended to provide liquidity and facilitate decision making. As we all know, decision making is very important in any business. So so the statement begins with net income, you understand, or gross revenue, fewer expenses, and net profit or loss. So the expenses are I don't know how to put it, are categorized according to their nature, like selling, marketing costs, research and development, administrative. So the statement there is therefore a summary of financial information. That's all you need to understand. It's just a summary of financial information about your organization, which presents the most economic important, as in the most important economic elements to be considered in a business financing decision. So this includes income statement items, balance sheets items, then a statement of cash flows and outflows as well, by category and function. So it provides an overview of cash inflows and outflows, including a change in accounting payable and receivable, net sales, the cost of goods sold, factory overhead, and gross margin as well. Yeah. So now the next big question here is, what does it mean to have a stable cash flow? This might be a very critical question to answer. So, as we all know, having a steady and stable cash flow means that you don't have to cut operating expenses. Let's say, for example, now when a small restaurant business owner applies for a loan, they are routinely rejected because their credit scores are not high enough to qualify them for the loan they requested for. So financing institutions are willing to finance a small business based only on the assurance that the owner will make regular payments regardless of how high the interest rates or monthly payments they request. I don't know whether if you guys are getting my point. So having a small but let's say stable cash flow allows you to have fewer overheads, therefore freeing up more financial room to invest in growing your business. That's the number one you need to take down. So when you capitalize on these elements, so strong relationships with your customers as well, then factoring invoices, you understand? So your business can benefit from a comprehensive financial stability package. So your solid financial management structure will help you meet your financial obligations and will prompt your credit range. So now the next tips here is tips for managing your cash flow. That's how you can manage your cash flow to make more profit in your business. Now the first one here is to work with your budget. We all know our budget, what's your budget, so you just need to make some alignments and make sure you put it in order. Then the number two here is know where your cash is coming from. Exactly, that's why you most importantly need we talked about the cash flow statements. So that will help you in way on how to know where your cash is coming from. So number three here is know what increases your outflow. I believe if you are a good examiner, I believe this shouldn't be hard for you to understand. So know what increases your outflow as well. So the last but not the least here is avoid bad debt. I believe no one will want to go into bad debt here. So you should try as much as possible to avoid anything bad debt. Because bad debt will negatively affect your cash flow of your business. So I believe that will be all for now. Please, if you enjoyed this tutorial, please kindly click the subscribe button and leave a like, and if you as well you can drop a comment. Thank you so much for watching this video. Please just press the bell icon here for notification of my next coming uploads, of which we'll be talking on how to grow your business as well. Thank you so much for watching. See you some other time. Bye.